How does financial aid work for student loans? In today's financial climate, understanding how financial aid works for student loans is more important than ever. With rising education costs, many students are seeking ways to fund their college experience. Recently, there has been a surge in interest regarding financial aid options, especially with changes in government policies. Let's break down how financial aid can help you navigate your educational expenses. Financial aid is essentially money that helps students pay for college or career school. The primary way to apply for federal financial aid is by completing the free application for federal student aid. This application gathers financial information about you and your family. Schools and the government use this data to determine your eligibility for aid. There are various forms of financial aid available. Grants, such as the Pell Grant, are considered free money that does not need to be repaid. On the other hand, loans are funds that you borrow and must pay back with interest. The two main categories of federal loans are subsidized and unsubsidized. Subsidized loans are awarded based on financial need, and the government covers the interest while you are enrolled in school. Unsubsidized loans, however, begin accruing interest immediately, regardless of need. After submitting your free application for federal student aid, you will receive a financial aid offer from your school. This document outlines the grants, loans, and sometimes scholarships available to you. The amount you can borrow depends on your academic year and whether you are classified as a dependent or independent student. For most undergraduate students, loan amounts typically range from $5,500 to $12,500 annually. Additionally, there are direct parent loans for undergraduate students and direct plus loans for graduate students. These loans generally have higher borrowing limits and distinct eligibility criteria. Recent updates to loan limits and repayment options are noteworthy. For instance, new loans taken after July 1, 2026 will feature only two main repayment plans: the Standard Plan and the Income-Driven Repayment Assistance Plan. There will also be new lifetime borrowing caps, and some older repayment options will be phased out. To secure a federal student loan, you must complete the free application for federal student aid and any additional paperwork required by your school. You will also need to sign a promissory note and complete entrance counseling before funds are dispersed to your school. Typically, repayment of student loans begins after graduation or once you leave school. Some loans allow you to temporarily pause payments if you encounter financial difficulties, but this policy is changing. For new loans, you can only pause payments for up to 9 months within a 24-month timeframe, and interest will continue to accumulate during this period. In summary, financial aid for student loans is a structured process that starts with the free application for federal student aid, leads to a financial aid offer, and involves borrowing funds that must be repaid. The type and amount of aid you receive depend on your financial situation, your school, and current government regulations. Understanding these components is key to successfully navigating your educational financing.